Well, we will look, as long as Wall Street can create lots and lots and lots of digital gold and silver, they can continue to suppress the price, because we all know a rising gold price is an indication of a failing currency. And that's what they don't want you to understand. They don't want you to own it, because once you take possession of it, it becomes invisible to them, right?
Right.
Okay, so that's the first thing. But understand that when the public loses confidence, those overnight resets are when gold and silver will begin to go toward their true fundamental value, because they have to get the population's confidence back. And this garbage, the fiat money, has no intrinsic value, and it's only used in one place. So they take gold, that is the primary currency metal, and here's the answer to your second question, okay? Physical gold, physical silver is used in every single sector of the global economy. So it has the broadest base of functionality. So you hold it, you own it, okay? But because both gold and silver, it is used in medicine, electronics, the financial system, art, jewelry, food, space travel, and on and on and on. Every single industry of the global financial system, so every sector, not just the financial system, every single sector. So what does that do? That means that 100% of the time you have demand. And when you go in the physical world, there is a finite amount of it, period, end of discussion. Well, right now we're on a dual system, right? Where you've got the paper price of gold that people look on CNBC or Bloomberg or in the paper or whatever and says, oh, spot's at $2,001.39 or whatever. And silver spot is at $25 and change, whatever. But they can create as much gold and silver as they want that does not exist.
Right.
But what have we seen with the premiums when you want to buy the physical? So we're seeing in that area, what'll happen is the premiums will get larger and larger as they are now, and will more accurately. At this point, they are not accurate to the fundamental value at all, which I would gauge is somewhere around 15,000 or more globally. If it were the US, it'd be more than probably about 60,000, 70,000 an ounce, which I know sounds outrageous, but this is a $20 gold coin, right? So 1900, well, if you told somebody someday that 1 ounce of gold is going to be trading at $2,000 on the spot market from 20, they would have told you were crazy. When they go to the CBDC, people are going to think, oh, okay, they've solved it, but they haven't solved it. They have to get rid of all of the debt. They have to finish the transfer of wealth. The way that we are all going to know that they're truly at the end is when they put a component of gold in it, because that creates fiscal responsibility. You know, what people also have to understand is you vote with your purse and your wallet. So if you buy the money market funds or stocks or annuities or ETFs or any of that garbage, that's your vote. And you're basically saying it's okay with me if you take all my wealth. When you buy gold and silver, that is when you are actually taking your wealth out of the system, holding it in real money. And when you need this garbage to transact, you can convert it into that garbage and then use it like that, rather than giving these central banks an opportunity to steal more of your wealth. Here's why we are at the end. First of all, I've been studying currencies and currency life cycle since 1987. And there are patterns that you see 100% of the time. So frankly, if we're doing the same thing and you're seeing all those same patterns, and I see all of them right now, chances are you're going to get the same result. And there are over 9,800 currencies that no longer live. So you've got a lot of data to draw on. But officially, my favorite chart, right? If you said to me you can only use one chart, then the one that I would choose is from the Federal Reserve Education Department, the FRED, F-R-E-D. And you just in the search bar put purchasing power of the consumer dollar. And what you will see is in 1913, there was $1 worth of purchasing power. And today there is barely more than 3 cents. So one of the big problems and why we can't kick the can down the road is because there's no more purchasing power to inflate away. The second reason is because the key tool that the central bankers have to regulate the rate and speed of inflation are interest rates. And we were anchored at zero for like 14 years.
14, 15 years, yeah.
Yeah, okay. What's kept us in the position of the world reserve currency that enabled all of that was the petrodollar. And Saudi Arabia, I mean, first of all, it's OPEC plus. It was the plus. Russia is the plus, right? And they just completed a couple of deals, like 2 deals in China for their refineries, and have come out and said, well, we can accept any currency for our oil. It doesn't just have to be dollars. So if it doesn't just have to be dollars, then why do all those central banks need to continue to hold it? And did we not just show the world that if you don't do what we want through the SWIFT system, the global payment system, that we will, boom, cut you off? So, I mean, they're going to bring that out, but until there's a component of gold in there, and the IMF has discussed putting a component of gold. Originally, it was based on gold. And then, of course, when we went to pure fiat, they took the gold out. But once there's a component of gold in there, but I am in 100% agreement with what you're saying here. And, you know, but it also makes me wonder. I'm 100% certain, I'm a gazillion% certain that global central banks understand that we are at the end of this currency's life cycle, right? I mean, everything has a life cycle. I guarantee you I'm at a different place in my life cycle at 68 than my granddaughter that just turned 8, right? It's a different life cycle.
Right.
So if they absolutely know that, and I'm certain they do because the currencies don't have any value left,